Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. I've got a great video for you today. I want to take a look at MicroCapClub. To summarize this, it is a group of individuals who are passionate about finding stocks that are microcaps. And it kind of aligns with the belief that I have that every amazing company, Apple, Tesla, Google, Microsoft, Nvidia, Dell, Apple, Goodyear Tires, Lazy Boy, etc. They all started as micro-cap companies because, a company has to start somewhere, just like you and I have to start somewhere. We can't become, huge kings of our empire or queens of our empire right from the start. So we have to start at something at the very basic level, which for stocks is microcaps. And so they look for microcaps. And what I've found, and this is not a sponsor, and I'm not recommending you purchase their program or membership. I'm not a member, but they do show you stocks that they have recommended before. And one thing I've noticed that I want to share with you guys that makes this video powerful is they are often very early before a stock goes from, maybe 1, 2, 3, 4, 5, $10 to 50, 60, 80, 90, 100, $200 stocks. So just for some quick clarity, I have rode the wave of in-phase energy from, I didn't ride it from $1, but it went $1 to 300, AMD $2 to over 100, digital turbine apps from $1 to 100, Renasola $1 to 30. There's a few more that I can't think of off the top of my head, but basically those are micro-cap companies that moved up to small cap, mid cap, large cap, and some are back down, some are still up in the sky. So I want to show you not only how they are early, but what we can use from their data that they provide for free to model out and project when we could potentially see this stock as a potential buy for a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10x return potentially. That all depends on the market. Right now we have a lot of political turbulence. As of right now, as of this recording this video, they are stalling on the debt talks. So, who knows what's going to happen with that. But let me take you to see the MicroCapClub website. And then let me show you a couple of their examples and how you can use this data to model out for yourself, create a catalog, set some dates, set some alerts, remind yourself in the future to go back and look at the stock and see if it's still fundamentally as strong as we would want it to be for a maybe potential move. So we'll look at the indicators on the longer term averages. So we'll look at the simple moving averages on the monthly, and we'll look at the MACD momentum on the monthly as well. And yeah, I will just dive in a little bit more so there's clarity, but let's go ahead and look at the website. All right, so we are on the MicroCapClub website. I went to the About drop down and then I went to Company Performance. So this is their top performers on members forums. I'm not sure what that means because I'm not a member and I don't know how many forums there are, if there's like degenerate forums or if there's master forums, who knows. But as you can see, their number one priority is finding great companies early, and that they do. And just really quickly, if you want to become a member, it's somewhere in here. I think it's up here. I'm not going to go into it, but it's $497 for a year, or you can submit a stock analysis, a company analysis, what is it? An investment thesis of a company you believe is undervalued and should be getting some attention. So without further ado, let's just look at this real quick. So the asterisk right here means that they acquired the company. Let me just blow it up really quick for you guys. Okay, so asterisk equals acquired. DWP means date when profiled, and PWP is price when profiled. So we want to pay attention to the PWP, and then we'll also look at today's date as well. So it looks like they're going from their highest return to their lowest return. So XPEL was profiled back in 2013 and it is now 2023. So 10 years later, it went from 36 cents to $73. And I guess let's look at the financial integrity of XPEL because I'm not familiar with that stock. I'm not a fan of this dark mode. Okay, XPL. So it is an auto parts company. It looks to be kind of healthy. We have little to no debt here. They have 338 million in sales, $45 million in income, so they're profitable. 40% gross margins is great. Shares float is pretty low. Institutions are currently buying. Earnings per share over the past 5 years over 100%. Sales over the past 5 years 36%. So we can see they did very well through the Great Lockdown, and just based off this data, they have been performing pretty well. And we can see, yep, this stock used to be a nothing burger. Back in 2013, it was 40 some cents, and it is now, it got as high as over 103. So pretty good for them. So yeah, these are the kind of, I just want to show you that for the kind of caliber of companies they have here. And as we can see, they have Celsius Holdings, which is that energy drink. If you guys are familiar or not familiar, it is very popular. I've had it. I actually prefer it over some of the other energy drinks just due to the ingredients. So they had Celsius Holdings at $4.25, and it had, as of 4:30, it was $95 for a 2,000% return. So again, caliber of companies are pretty high in my opinion. And one thing I do want to call out with this, their performers companies when profiled, they are usually very early. So, for example, we saw XPEL. They got it in 2013 for 30 some cents, but I mean, you could have bought it in 2018 for maybe 5 times more than that. So you would have paid a little bit more of a premium, but a lot of that risk wouldn't have been there, or comfortability. I feel a lot more comfortable buying a stock when it's over $1. But there are some companies that when they go under $1, they're amazing value adds if you know what you're buying. So currently the one that I am sticking with is AEY, Advantage Technologies. I think that one's a good buy at the moment. We'll see how they perform on their next earnings, but that one has taken a nosedive from around $1 to now it's 50 or 60 cents. So we will see. And what I mean by they're usually very early. So if I do Control F here and I type in apps, because I got into this one, they recommend, they profiled this back in 2014, but you would have wanted to buy this one. So they profiled it in 2014 at $3.50. You wanted to buy this one in 2018, 2019. This is when I was in it around $1. So I got in it, and it essentially went from $1 to over $100. And that's what I meant by when I say this company, MicroCapClub, is usually very early, very ahead of the game, but there's usually cycles that happen in the markets that, take some time for the stock to develop. So they had Rosetta Stone at $9, and now it's at $30. So what I can glean from this information that I showed you, and this might just sound redundant, but basically, going back to the top, so XPEL was 36 cents. You could have bought it 5 years later at $1.50, and you would have had a 1,000% plus return. Digital Turbine, they profiled in 2014. You could have waited until 2018, 2019 and bought it cheaper and still had a 1000% return. The pattern I'm trying to establish here is they will profile a company where the profile price is higher than what the potential current price is, and it could just be going through a cycle. So we've covered, just really quickly, this website. Looking at stocks here, we can see the caliber of stocks here are pretty high. The pattern of this stock or this website is that they're usually very early, but usually kind of, I don't want to say accurate. I mean, maybe they're not showing companies on here that didn't, do well. So, I've established that. And the next thing I want to establish is we want to look at the date when profiled and price when profiled and current price here and see where it is still very low. So what I mean, for example, is let's just go from top to bottom. And so I'm looking for a gap here that's pretty low, meaning they profiled it a while ago and the stock has barely moved. Or maybe it's gone through a cycle and it's waiting to go through another down and up cycle. So I'm going to continue my way down. Here we go, photon control, and we can see when it has the .to like this, it usually means it's over the counter, or it's on a different exchange outside of the US. So photon, no, see. So we're gonna keep going down. Global atomic, again, it's glo.to. Going on down. Evergreen Gaming, yep, we can see here TNA.v. Yeah, no. So we're just going to continue going down. We're not going to be discouraged because we do not want to invest in over-the-counter stocks. Wow, this one went from $160 to $1,000. Crazy. Tornado Global Hydraulics. HROW, I know this company. Let's see HROW. So it was 25, it's probably come down, yep, and it's gonna go down again. Yep, you guys can see it's a bear flag. So we have our flagpole right here, and then we have our, imagine like a rectangular angle going up and to the right, that's a bear flag. So this, let's look on the monthly because we look at the longer term charts. So this is potentially creating a cup and handle, which means you guys can see everything. So right here is our cup, and then it's going to come down and probably touch down here 11 or 9, depending on how long it takes to get down here. And it might go back up. So let's see what the actual fair price of this company is. They have a lot of debt. So actually, I don't even know if I want to even do this one. So they make 88.6 million and they lose 14.1 million, meaning they're not profitable. Divide that by the shares available of 25.25. Yeah, this stock is very overvalued currently and in the future. So it's not a bad stock per se, but it just doesn't hit the metrics we're looking for. And once this market cap gets over $1 billion, we can incorporate that into our calculation. And then if we can also include their cash, which I think they only have 96 million in cash. They had a ton of debt, 104 million in debt. So total assets 157, total liabilities 129. Not a really attractive ratio there. So again, HROW is probably going to come back down to 10 or below. And I think I have that one in my catalog already. So that's one for the way out future. Let's see. Going on down, Tornado, HROW. InfuSystems. Let's see, INFU. Yeah, all right, let's look into this one. So they profiled this one at $1.58 in 2013. Now it's $9.30. And again, we have a bear flag here. Let me just move my big old head. Go right here. So we have this flagpole coming down right here, and then we have a rectangular to the right. So this is coming back down, and it's going to be really good depending on their sales. So, wow, this number sticks out right here. It's showing that they're very undervalued, very overvalued here, and in the future they're undervalued. So that means they're guiding out to be spectacular, but currently they are ugly. That's the simplest way I can do it. So if we take they're profitable, 113.5 million plus 0.1 million profitable, great. Divided by 19.39 million, that's the shares outstanding. That's a $5 stock. And we're not including cash or debt just because I can tell it's not going to make a significant difference. Total debt, 33. So, I mean, that would have brought the stock price down to probably $4-ish. So again, we're going to want to see it come back down to around $4 to $5.30. And when it does so, we want to be looking at the longer term chart. So what I mean here is, so INFU. Yep, I had this one cataloged already, which is amazing. So we wanted to come back down. You guys can see right here, there's some good support here. So it's going to break down. And I want to show you the momentum. So the momentum, one sec. So the momentum here is going to give us a picture of when we could anticipate to come back into this stock. All right. You guys can see my screen. So if we're looking here, look at this. This right here shows it's getting ready to rip around to the other side. However, looking at the pattern on the monthly and where it is in the Ichimoku clouds, which are basically a Japanese indicator, it is under the bullish cloud, which means the stock price is underperforming to where it should be in terms of a technical standpoint. So I see a fake out here, and I see this red continuing probably over to 2024. And I feel comfortable not getting in this stock because it is overvalued, like I said. So we're going to wait on this one, but it is in my catalog because I had to chart it out. So I'm just going down through the list here. Luna Innovations they profiled at $1.10 and it's $6.46. Let's take a peek at Luna Innovations. Because what we want here, and I'm just kind of going back to the beginning, is we want a technical move along with a fundamental move. If the stock is ready to make a huge jump in price, I want to see that the company's executing, growing sales, growing margins. We have a balanced ratio of assets to liabilities. So we're not just seeing that right now, and I think that's due to the overall market. Whoops. I apologize. So I'm going to move myself, I guess, right here. This is a fine spot. So Luna Innovations, again, they profiled around $1, which was good for them. It went over $12. Again, I'm just not seeing the story here. So we have 112 million.1 minus, they're not profitable, minus 2.8 million. And then the shares outstanding divided by 31.66. It's a $3 stock. We're not including any cash or debt, which would probably, let's see, is it significant? It is not significant, and it would hurt the stock price even more. So again, this type of company right here is overvalued. It's making a good technical move so far. Oh, my head's in the way. Nope, I can move it. So we can see right here, it's making a good technical move, but in my opinion, this is the monthly chart, we're going to see a retraction down to $7, and it's going to be pretty bearish. So what we have here, it looks like a classic Elliott wave. So we have, this being the prime buy area. So 1, this line is 1, 2, this line is 2, 3, this line is 3, A, this line, B, and then this drop down here, C, and then this little fake out right here is D, and then it just continues downward. That's Elliott wave theory. Feel free to research it. So again, the microcap company is very early, and so what I'm seeing now based off of these stocks is there needs to be another down cycle. We need more pressure from the Fed. Unfortunately, we need to see a crisis. Unfortunately, we need to see pain. We're not seeing pain. Let's continue to go down. So we looked at Luna. We could look at this CLVLY. Nope, that is OTC stock. Going on down, EDAP. Alerted at 2, it's currently 10. Let's check this one out. France, it's still really high, but let's look at the numbers. Okay, this one looks doable. And what I mean is they make 60 million, but they lose 3 million, so they're almost profitable. Decent market cap size. Institutions are currently buying quite a bit. Earnings per share next year is looking pretty good. Earnings per share next 5 years, they can't really guide that out. So looking at the past 5 years, it's not that good. Sales are 9%, which is that's decent. Gross margins 43. So I think they can become profitable. Let's run the numbers here. Let's include cash and debt because I actually like where this is. So 60.1 million minus 3.2 million gives us 56.9. Now let's add cash, remove debt. They have 63 million.14 cash, and let's remove debt. Minus 7.9. That's pretty good. This company's looking pretty good. And just to call out, total assets is 101, total liabilities is 29. That's a good ratio. That's at least a 3-to-1 ratio. Going back up, so looking at cash and debt, we're now going to divide this by the shares available to the public, which is 12.43. So a fair share price of $9, which is pretty decent. And if we look at the overall momentum on EDAP, you guys can see. So overall momentum is pointing to a downward trajectory, but let's look at the yearly. The yearly looks strong. So this one's already in my catalog, which is cool. It looks like we're definitely going to come back down and test $8.88. Cool little pattern here. This is bullish. So let's just do some quick math off the top of our heads. So let's look back to the last 5 years. So 2019, they had 44.6 million in volume. 2020, 27.3 million in volume. And there was barely a share price difference here, if we can see this. 2021, there was 41.4 million, and it went really high and came back down. 2022, 18 million in volume. So very light volume, but it shot up. And then this year, we're at 5.7 in volume, and we're almost halfway through the year. So if we're looking just at patterns, okay, maybe it's an inverse head and shoulders. So over this, we have left shoulder here, which is kind of out of the screen. Let me bring it in. Here we go. So left shoulder here, head. Maybe it's coming over here to make a right shoulder. So I'll probably want to look at this one around right here. If we can get it at $5 on a right shoulder turnaround, this is going to go over $21. So this is a good one to catalog. So let's just do an example of a catalog here really quick. Google Sheets is easy. It's online. You can access it from any computer versus having, you know, a spreadsheet saved on one computer. Because if you have a spreadsheet saved on your laptop and you go somewhere else, you can't access it. So, so we want to do stock, and we'll put alert, date, or actually we'll do unique stock, and alert date. So by doing this, if I put in a bunch of stocks over here, I can then, if they're unique, I can do a cross-reference over here to make sure I'm not doing any duplicates, because I don't want to duplicate any efforts. So I'm going to put EDAP here, and I'm going to put, since I don't have anything over here, let's put EDAP because we know it's unique. And it's unique to this spreadsheet. I already have it in my catalog. This is for you guys. So we're going to put an alert date of, let's look here. So like this is the middle of 2025. So let's do 6/1/2025. And what we want to see is, and the pattern is inverted head and shoulders. All right. And we're going to call this investment catalog. And what this is going to do is over time, over the days, over the weeks, over the months, over the years, you're going to build this up and you're going to have thousands of stocks, and you're always going to have an arsenal of stocks to look through to look at what investing in. So each month you're basically consider the stocks your customers. You can go back to your customers and see if they're ready for a move to happen. Look again at the fundamentals, look at the technical setup. You want to have, if you have those two aligned, coupled together, you could have a really powerful move on the monthly chart. That's how I got to my 3.3 million. I'm not there now, but you know, just continuing to snowball. And as you continue to grow, remember, continue, like, dedicate at the very beginning of your journey a small amount of money like I did and build that snowball. I have not taken any money out. If I would have taken out $500,000 when I got there, I wouldn't be where I am today. I would have less money today than I do now. So it can be tempting to see 500,000, 1, 2, 3, 4, 5 million, whatever. That's great money. If you need it, take it. But if you are in a position to continue to snowball that money and you have a process down, you have a strategy, you have effective tools and ways to measure stocks, you know, use that same snowball. You're playing with the house money at this point. So again, it's going to vary on your situation, your risk profile, etc. Let's go down this list because I want to keep going. And feel free to drop off. If you made it this far, please subscribe. Hit the like button. It really helps out. We're going to continue on. Okay, we're going to go on down. We just looked at EDAP. It's going to do great. Ooh, neat.com. Oh, it's outside of the US. Covalon Technologies, outside the US. Leat Corp. Let's see, LEAT. Nope. It is not a US company. Going on down, Centrus Energy, nope. Liberator Medical, LBMH. Nope. Outside the US, I'm pretty sure Liberator. Yeah. All right, going on down. OptimizeRx, that sounds kind of cool. OPRX. All right, we've got one. Let's look at it. Ooh, yes, this is what I love. Okay, let me move my head. So this went from, again, $1 to over $100, and it is going through a cycle and coming back down. This is great. I'm excited. The numbers look okay. So, they have 62 million in sales. They're not profitable now, but that can change because their gross margins are 62%, which is amazing. Institutions are selling. That's fine. They're guiding out really well for next year. Sales over the past 5 years are 38%. That's a baseline to go off of. Let's just do some quick calculations here. So we're going to do 62.5 million minus 11.4. That gives us 51. And let's add cash, remove debt. Looks like they have a lot of cash. No, not that much. They did have a lot at one point. Plus 18 million.21, and total debt is 0, so that's fine. So we're gonna do the 69 divided by 14.87. It's a $5 stock, so it's gonna come back down here. Again, it went through a cycle. This looks like Digital Turbine. It went from $1 to freaking almost 100. Digital Turbine went to 100. So this one looks good. Is it already on my list? It is. How does my monthly look? All right. So it is coming back down. So I'm waiting. I have a little circle here to catch it. So yep. Just waiting for it to come back down to five-ish bucks, $2-ish bucks. Not really. This one doesn't really look that attractive at the moment, so we're gonna pass on it. Let's continue on downward. Idaho Strategy Resources was $1.26, and now it's $5.66. This could be ripe. This is IDR. Oh, it's OTC stock. Okay. Going on down, Green Brick Partners, pass Sono-Tek. Let's see, SOTK. Yep, let's check it out. Ooh, this one looks actually bullish. We kind of have a couple patterns here. So we have a flag pull, then the flag, and then a move up is kind of the next trajectory. Also, we kind of just have like a descending wedge here where we have the top of the triangle and the bottom right here. And then we have a very bullish looking candle here, but it's early in the month. Ooh, not very attractive, but let's go. Let's run the numbers. So they're profitable. So they make 16.4 million and they make another 1.1. Let's add cash and debt here. Nothing but sales, unfortunately. All right, they have 4 plus 4.84 cash. Total debt is 0. Divided by the shares available of 11.3 divided by 11.39. It's a $2 stock trading at $5. So not very attractive here, but it is essentially trading off of technicals, which is kind of dangerous given our environment. It is a very thinly traded stock. So on Friday, it traded 301 shares and it brought the stock price down 10 cents. So pretty crazy. Yeah. And insiders are selling like crazy, which is not cool. So the CEO has some shares. I mean, he's selling minimal amounts, but it's still just the consistency, and the CFO is selling too, so it's just not a great look. Let's see their income really quick. They're growing their profit. They're growing their revenue. Their net income is kind of staying stagnant. So, yeah, I don't even know what they do. Design and manufactures ultrasonic coating systems for applying on parts and components for the microelectronics, electronics, alternative energy, medical. Okay, so kind of a cool company to get into. A little overvalued. Let's take a look at my, let's see if it's here, SOTK. Have I charted this one out? I definitely have. Yeah, so it's in a long-term breakout. Yeah, it's in a cup and handle breakout. So we have the cup right here, the handle, and then the shoot. So it's from 33 cents, cup height 297, so it's gonna be like $5, which it went up to. So this is technically trading at a healthy level. Just not, the fundamentals don't match for me, so I'm gonna have to pass on this one. All right, let's continue on down. Performant Financial, that sounds kind of funny. PFMT. Okay, let's take a look at these guys or girls. Goodness. It's not bad. They make 107, they lose 9 million, so they make around 98 million divided by the shares float of 58, so like less than $2 a share, which is at right now, it's at $2. This could be something to watch on a wave, so PFMT. So if we get into this one in a few years, I've already done this one before. So what we're going to want to see is, I'm going to go to the highest candle and go to the resistance where it's never broken up right there. And we have right, I would say probably like right here. Yeah. So 1/1/2024. So I'll put PFMT on our list because it's trading at a healthy range right now. So PFMT, alert date's going to be 1/1/2024. And pattern, I'm just going to put momentum reset. And so what I'm saying is like right here, it looks kind of ugly. We have a nice green move, down move, red move, and it's green. So it's kind of choppy. I guess choppy is a good word for it. Just choppy. We're going to want to reset. So yeah, it's a decent company overall. Let's go on down. Fab Form Industries, that one's outside the US. Full House Resorts, this one's a good one. I was in this one for a while. FLL, let's take a look at it now. I think it's below 7. I think it's in the 6, 5, 6. $8. Wow, look at this candle. Just bounced perfectly off of the 50 SMA. Looking at the numbers, so 172 point, or that's it, 0.0, minus 26.3, so they're not profitable. And if we do cash and debt, it's not going to help the stock at all. So let's just do divided by 32.5. So this should be a $4 stock in my opinion. They do have a lot of debt. We're not going to look into this one, even though it looks technically nice. It kind of looks like a trap in my opinion. So again, we want to see a full reset here, and I know I have this one. So let's just see when we want it to come back down. Jeez, okay. So a lot of scribbly scratch here. So it looks good on the monthly, like the momentum's turning, but I want to see it get down to over here, 295. This is 2/1/2025. Yeah. So I think it's just, right now it's just trading on smoke, which is fine, but let's keep going down. Farm Chem, 69 cents, now it's 285. Let's take a peek. What's PCHM? PCHM? Nope, it's OTC stock. All right, going on down. OneSoft Solutions, it's outside the US, HireQuest, no. Butler National Corporation, BUKS. Nope. Hog State outside the US, InMobile outside the US, Trupanion, Total Telecom, Alter, nope. Research Solutions, RSSS. I'm familiar with this one. I don't know why. This looks like it's going down further, so this doesn't look bad. It looks like it's fairly priced. So let's do some math on this one. 34.7 mil minus 0.8. They're not profitable. They have gross margins of 38, which is actually pretty nice. And let's add cash and debt just because it looks good. Nice. CEO purchased 4,000 shares. That's nothing. So we're going to add 10.6 and we're going to minus debt. Nothing. Okay. And if we do this divided by shares available, which is 18.6. Whoops, I put 18.69. 44.5. Let's do it again. 44.5 divided by 18.6. 2.39. So it's currently undervalued in my opinion. I like this one. Let's check RSSS. SSS. All right. You guys can see that. So it's broken down below the long-term support. The next one is around 182. This isn't bad. Let's look at the yearly. Yeah, yearly it's just showing that it's facing some resistance. Wow, it's actually making a cup and handle on the yearly. Sorry. Look at this. We have the left side of the cup, right side of the cup, literally equidistant down here. So based off of this, we're going to get the low of this, which is 55 cents, the highest 44. So we take 3.45, so $7. This can go to $7. Let's look at the volume. So this year we're at 1.5 million in volume. Last year was 6.8. So volume has dried off on this, dried out. Let's look at institutional ownership. So Fintel, and we're going to go to RSSS. So there's Finviz, which is a little bit lagging in data, shows 33.6% ownership. And Fintel shows 30.5% ownership. So institutions have been selling a little bit. Vanguard added a bit. It looks like Vanguard owns 838,000 shares. So I dig this company, honestly, unfortunately. Sales over the past 5 years, 5%. Earnings per share over the past 5 years, 14%. This just goes to show that they are consistent. They are just slightly not profitable, but this year's guidance should be profitable. So I like this. I'm actually I would invest in this one for long term. Yeah, I like this. So let's just add to our list RSS S and then RSSSS. Alert date, let's put 6/1/2023. Pattern, so we're gonna put yearly, cup, and handle. All right. Alaska Power and Telephone, interesting. Let's just see if it's trading. APTL? Nope, over the counter. Okay. So we're about halfway through this list, guys. I'm sorry, I didn't know it'd take this long. Let's just look at a couple more. Eris Water Solutions. Oh, no, wrong symbol. My bad. This is Arius Network Services, so going on down. Let's see. Entree Resources. ERLFF. ERLFF. Nope. OTC. Let's just look at one more stock together. What's a good one? Kingsway Financial. Okay, that one I think is public KFS. Yep. All right, let's look at this one. Woo! This is hot. They do 94 million in sales. That's really good income. It's about a $5 stock. They're ripping and roaring though. It looks like institutions have been adding. Geez, KFS. The delayed data says 45.7. This is 39.2. So actually institutions have been selling. What does this say? KFS. The yearly shows that it's actually ready for a long-term reversal. Look at that. Last year's volume was 4.3 mil. This year's 6 mil already. So, woo. Dang it. All right. Yeah, this is just super breakout mode. This is looking amazing. I went from $1 to freaking $10, so it's coming back down. We can see people are taking money right here, big red candles. But this still looks healthy technically on a long-term chart. So yeah, probably see a pullback and a reversal, in my opinion. Yeah, this is just earnings per share over the past 5 years, 30.30, sales 16%. This is just looking good, honestly. Yeah, net income, wow, nice buys by the CEO, directors. I'm sorry, these are pretty puny buys actually, but the director bought almost $200,000 worth at 896. Wow. Wow, look at these buys in the fives. Nice. Okay, so this just looks really good. I feel like I'm missing the boat on this one. They don't have their debt listed. That's kind of sketchy. Why don't they have their debt listed? Ooh, they have a ton of debt. Okay, total assets 285, total liabilities 263. That is not good. That is not good. That is not good. So I don't feel bad anymore. All right, you guys. If you made this far, please consider subscribing. If you want to pick up where I left off, feel free to do so. The platform Thinkorswim right here is free to download. It's very powerful, super amazing. A lot of different things you can do. Have a great day or night. I'll talk to you soon. Bye.